The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. How's everyone doing today? Hello, Eastwood, Westwood. How are you? Hi, Bamsey, Patrick, Toby, everybody. Tamir, I see your name up here. How's everyone doing today? I'm doing great. Alexandros, how are you, brother? In fact, I'm as brilliant as a diamond. You guys better put on your shades. Okay, Blake's going to be with us in a few minutes. Hi, David. So just a quick review in the crude oil. Mentioned Nick's number on Wednesday at 9:02. There was a 100 pip rally. Then yesterday talked about 8.5 being a decent entry with another buy at 48, never got there. Another 100 pips. You know, I'm a big believer in partial profits. Thank you, Toby. Hi, Arif, how are you? Ash, how are you? Nice to meet you. So we had an agreement when I started here a month ago. The first month is now in the books. A month of face is now history. Hi, Matt. So any of my trading suggestions, I'm a big believer in partial profits. Hi, Mystic, how are you? Looking forward to your interview next week. So, you know, there are times, Nicola Duke. So this is how you end all your confusion. But let me just finish it. Anytime I make a trading suggestion, there are times I'll take 30, 40 pips and take half off and then move my stop to BE. So you still have 90 pips. You had over 100 pips. If you don't go to the door and get paid on a 100 pip move in your favor, you're going to suffer. It's always a good idea to put something in the bank, and then if the market keeps going, you're still there. And if the market retraces and you still believe in the trade, you're recommitting with profits rather than principal. Can I get a why from the house that if you're not utilizing that type of trading strategy, it's really money management, that you're going to give it a shot? I know you do it, Nathan. Because especially if you trade for a living, it's nice to get paid every day. It doesn't work all the time, but it's still very nice to get paid every day, put something in the bank. It turns the trade into a riskless, stressless position because you've already made money on the trade. And if you get stopped out BE, it's still a winner because you've taken half. Do not let 100 pip winners slip away and turn it into a loss. That would be a novice type of mistake to make, in my humble opinion. So with a month in the books, I really want to thank everybody for supporting FACE, for spending time. Time is your most precious currency. So I want to thank you guys for hanging out with what I believe to be the best team I've ever been part of. You know, if you could find a better combination, hello Raphael, of chemistry and teamwork like we have here in FACE between myself and the team, they're all stars, and we have a lot of top gun traders in the community. If you could find a better situation than that, thank you, Alex. You're a part of it. And I'd like to know who they are so I could check them out, because I've been around the block a few times. I've been around and been in the business for several decades, and this is really one of the most, or the most talented group that I've ever collaborated with. So for someone who's been around, like a major league ball player who gets traded from team to team, you know, kind of a journeyman type person. It is like the dream team. Thank you, Hardiato. And I'd also like to thank everyone who made a decision and a choice to support this free room by becoming a subscriber. You know, at the beginning, we were talking about that, you know, maybe it shouldn't be a free room. And I'm a little more mercenary than Blake, and Blake wanted to keep it free. So for all of you that have made the decision for great intelligence gathering, by becoming a subscriber of ForexAnalytix, I want to thank you. By doing that, you're supporting this being a free room for everybody. And let me just look for something here. Let's find the chat box. Trying to paste something here. So anyway, this is the look. Here you go. If you haven't done it yet, so here you could try it for just $1. I want to get this. Oh, really? Okay, well, that's great to know. So there it is. There's the home page. There's the trial. I think it's going to be one of the most productive trials you've ever tried before. Everyone doing okay? So that's my pitch. I'm wondering, Steve, if you're here or Blake's here. Okay, can you post a link? I'm having a hard time posting the link for everybody to sign up.
Oh, yeah, hold on.
Really I'm trying it in the question box. I probably have to do it in a chat box.
Oh, yeah, here, just, all you have to do is go to the home page and then, here, just click on.
Yeah, I tried to copy it, but I can't paste it for some reason.
Okay, so all you do is you just put it in the Q&A panel.
Yeah.
Not the Q&A panel, I'm sorry, the chat box here. Here, I'll just post it.
Okay.
And then you just go to the home page there, and then you guys can sign up.
Okay, thanks, Blake. And Blake's going to be with us. No, I'm really not an Elliott wave trader, Mark. I'm really known for my RSI work, 3 drive formations. I'm dangerous when it comes to trying to be an Elliott wave guy. So what's great about FA is we have one of the best in the world with us, Greg Horvat. If you like Elliott Wave, I interviewed Greg. He was here yesterday. Take a look at the video. I interviewed him on FX Street. He won a very prestigious award on FX Street last year when I was there for being best analyst. Okay, so they have hundreds of guys there, you know, online trading academy, Sam Seiden, you know, his supply demand work. He's pretty popular, but Greg Horvat won it. So Greg is here. Nicola Duke, I interviewed, and her harmonic work is great. You know, I've seen a lot of things that she called the bottom last week in Euro Pound at 83. She had an 02 buy in crude that worked out for 100 pips. Nicola's great. Steve Volge, I didn't really know Steve that well, but I've been watching Steve and his presentation. His technical work is top notch. He does the candlestick work here. And I really don't have to, and we also have Stelios, who's a macro guy, who comes up with weekly and monthly stuff that's really great if you like to look at through a telescope. And Blake Morrow, I don't know if any of you guys have ever heard of him. He used to do a show called The Morning Edge, and this was his brainchild, him and Steve Volge and Stelios. And, you know, I'm so glad that they asked me to join them and be part of this.
Well, Dale, we're happy to have you. And this first month has been great. And I want to say congratulations on fostering this wonderful community, because you're really spearheading it and making it all that it is. And I'll tell you, the interviews that we've had, like this week, just because I can only remember a couple of days back, like with Mark Newton and Mark Chandler. But no, I mean, I remember, you know, a lot of the, you know, the traders that have come on, and you know, and I'm horrible with names. I need 3 times to remember somebody's name, like when I meet them. It's really bad. I'm like, that's why I wouldn't be good in sales, because I just can't, like, you know, hey, I'm Steve Smith, and then I'm like, the next time I meet him, I'm like, hey, Sally.
You know, a buddy of mine, when he forgets someone's name, he just goes, hey, amigo. So I know he's forgotten someone's name when he calls them amigo.
I do that. I use boss, Haas, whatever. I'll get
dude.
Dude,
hey, dude,
brother. Yeah. But anyway, no, I just want to say you've done a wonderful job here. It's so cool to hear, you know, what we started, and then I'll continue what I was going to say. What we started here, and what we wanted Dale here for, is to really put together, you know, obviously great analysis. You can get that from, you know, whether it's our team, Dale himself, which is obviously a seasoned technician, or, you know, a lot of the other experts. But every trader here is sharing their views and being able to, you know, put up charts that they want, that they're looking at, and it's about sharing ideas. I'll tell you, when I was doing the Morning Edge webinar for 15 years, by the way, I relied heavily on my traders around me, that means the listeners, to show me different setups, because you guys at that time were my eyes and ears, and I really enjoyed that aspect of doing the Morning Edge, and that's the same that we get here. It's like, you know, listening to like Mark Newton, because it was so fresh in my mind from yesterday, talking about, you know, some of the longer term aspects of the dollar index and whatnot, and he's seeing things that I wasn't looking at, and I'm like, oh man, you know, that makes a whole hell of a lot of sense. And but that's the power of a community, and that's what we wanted to foster here. And Dale talked about, you know, charging for this room, and when we first, you know, collaborated, and it was a discussion point, and I'm like, no, I don't want it that way, because I want you guys to be able to log in, know every day you can come in at the same time, and, you know, hear different ideas and different, you know, it doesn't always have to be a trading idea too. It can also be a strategy on how you manage trades, how you psychologically deal with trades. Dale will be bringing on different types of people. Matter of fact, I'm gonna introduce you, Dale, to Dr. Doug Hirschhorn. He's not on Twitter, but I don't think, but he's on CNBC quite a bit, and his name's Dr. Doug. I've met him a couple of times in person to do sessions with him. Great trading psychologist. You know, he really is a psychologist for major hedge fund managers. Dr. Doug Hirschhorn, if you guys don't know who he is, he's awesome. But, you know, hearing people like that, you know, that have different skill sets, it's great. And then amongst each other, being able to publish charts and say, okay, hey, I'm looking at the euro dollar here. Why? That's what it's all about. It's all free. And hopefully you'll get a little bit of an education. And you know,
people for years have called me coach. So yeah, I try and do a little bit of that in here. I know we're not an education company, but, you know, if I could add a tool to our community's tool chest, I'm glad to do it.
100%.
And before you go on, you know, I've been getting questions, and this is something else that's unique, and everyone probably thinks, oh, look, Dale and Blake are doing a commercial, but people have asked me, Blake, and we talked about this before we started, since we do have a service, people have asked me, why do I bring on guests that also have a service that they're selling? You know, like they're a competitor, because most don't do that. In fact, I don't know of another service that's going to bring in somebody else and give them the visibility to possibly get business here. I mean, they provide the content. So I responded to those people that our mission is to edify traders every day. And we also believe in abundance. You know, if we believed in scarcity, we'd be afraid of losing a subscriber. But we know our work's going to hold up to almost anyone we bring in here. And we don't worry about that because the community's our number one priority. And if we could bring people in, although they may have a service and people may want to go there, that's okay. Sometimes people need to have a different experience. It's more important that we're giving people great intelligence to help them make decisions when they're assuming risk. And I really think that also sets us apart from what's out there on the net.
100% agree. And you know what, Dale, what was saying that, and this isn't a commercial by any stretch of the means. And for those of you guys that have been listening, even for the last couple of weeks, and you've heard, can you see my screen?
Yeah.
Okay. For those of you guys that have heard me here in the mornings, you know, I'm not out here showing you ForexAnalytix all the time and, you know, hey, you know, check this out, check out this analysis, and this is what we did. I don't do that. I don't believe in that. And I really, and let me just stop here for a second while I'm on the screen. This is not a sales thing. I'm just going to tell you, our technology is second to none. So I'm not worried or deterred by anybody else coming along and, you know, oh, I got a better this, that. I don't care. I mean, we've got technology that's badass, and it's and everything is updated real time. And whether it's, you know, whether it's live data, whether it's analysis, it gets pushed out to mobile. You got alarms triggering and notifications triggering on your smartphones because support and resistance levels have been breached. New analysis have been updated intraday. You know, those all get pushed mobile, and I don't know anybody else that does that. So I'm not even worried about that. But I agree with you as far as the abundance goes. Look, most traders that I know subscribe to several different things because they're getting information and they're accumulating it from everywhere. And if we bring on somebody that offers some sort of service and it can benefit you, fantastic, and to each his own. And, you know, will we lose a subscriber in the meantime? Maybe. I don't really care, because I'm in this more for the community aspect of it, okay? For everybody on our team knows that I don't pay myself from our our company. I actually make my money trading. So this is all I do. This community, the ForexAnalytix, is to actually build our community of analysts, bring on people like Dale, offer a free webinar, blah, blah, blah. And look, if you guys like what we do, hopefully at some point you'll try it and hopefully you'll like it. And if you don't, you'll cancel. It doesn't matter to me because I'm confident in what we do. So I hope you guys all try it.
Because to the top, like.
Exactly. And so I don't worry about that. And because I know and I'm confident with what we have. So and that's not a statement of somebody who's overconfident. I'm just saying that our technology is bad to the bone. It really is, and our team is bad to the bone. And so I don't, I hope you guys try it. I hope you like it. And if you don't, I'm sorry, it didn't work out for you. But it's month to month. It's not like you're going to pay $10,000 and and go, oh, this isn't for me. No, you try it month to month, and if it doesn't work, it doesn't work. But
you mean pay $10,000 to learn the secret?
Yeah, the secret.
The secret. I say, Blake, the secret is there is no secret. It's hard work and persistence. That's the secret.
It really truly is, and that's it. And actually being able to accumulate, take in all the data that you get, and being able to make sound decisions based on that, you know, with good risk reward parameters, good money management skills. That's what it all boils down to. I don't, you know, everybody's like, oh, come learn my system and blah blah blah. I've heard that so many times over the years, and the reason why I handle, myself and Steve Volge, we handle majority of the basic technical analysis work here, because this is the same stuff I use intraday, and nothing's changed. And for those of you that have known me and heard me over the years, it's just all the same stuff. So it's not like I'm using some special sauce system. It's just basic technical analysis and sound money management. That's it. But you know, there are other ways to trade, and I don't ever knock other people's strategies because it's how they do it. It's like, you know, it's just, there's 1,000 ways to skin this cat in the market. Yeah. There are thousands of ways to do it. And you know how, you know, I was listening to, when I was listening to, just because it was yesterday,
Mark Newton.
Mark Newton, excuse me, thank you. He was like, you know, I only take really, you know, 7 or 8 big positions throughout the course of the year and have, you know, those viewpoints. And that's interesting that he says that, because I really only press the gas probably about that many times in a year, probably about a dozen times a year, maybe once a month. I'll step into the market pretty aggressively. And that doesn't mean like once a month, oh, this month is up and I didn't take a position. No, because sometimes it'll be like, you know, might be next month and I have 3 positions and I'm like, oh my God, these are the setups I've been waiting for. But, you know, I trade a lot, but there are only a few times a year that I actually really step on the gas and, you know, say this trade might make my quarter. So it's interesting but he does it a different way. It's not, you know, the same way that I do it, and nor did I expect it to be. So, but anyway, you know, we're really confident in what we do, and we think that the what we present to you guys, something's going to stick. I mean, whether it's you know, if you went to if you heard Mark Newton yesterday and you go, wow, well, I'm going to, you know, become a member of Newton Market Advisors or whatever, and it works for you, fantastic. That means you really benefited from listening in here. Or if you know, yeah, you're like, I became a client over at Brown Brothers, you know, and I get Mark Chandler's, you know, analysis, you know, plugged in all day long, and that works for me. Fantastic. I'm super happy for you, because what we really want you to do is we want you to succeed, and we want to reshape this bell curve, and that's what my goal has been the last 15 years, being in front of you.
How did you bring that up? There was a question, I don't know if you want to answer it, but someone asked Blake, after such a long run with Wise Trade, why did you decide to leave?
You know, because well, I had an opportunity to trade for a small fund, so okay. that it's
a better opportunity.
Yeah, and I'll tell you, this last several months that I've been gone, I've eclipsed what I've done at Wise Trade multiple times over. So this has been a really good good venture for me thus far, and I will also tell you, this has allowed me to have a lot more flexibility. I'm not married to the webinars as I had been 4.5 hours a day every day. Dale, unfortunately, I've got a great host that has taken.
That's grueling.
Yeah, it was 4.5 hours every day, and then on top of that, I've got somebody like Dale, who I've worked with in the past, doing webinars with, that I know is 100% capable of doing a great, if not better job than myself, bringing on so much different talent that we never could in the past, because it was all looked at as quote unquote competition. So, yeah, you know, this is, to me, it's there's a lot of different reasons, but hey, I don't want to spend too much time talking about all this, Dale. I just, you know, it was a conversation that was being made.
So we got rejected again up here in the Euro at the old high, Blake.
We did. This is and by the way, thank you guys. I'm going to move on to like market stuff now, and I hope you guys, I hope everything that I said sits with you well, and you understand, you know, my viewpoints on things, and I didn't mean to stretch out the topic either, and I didn't want it to be a sales pitch either. That's not my cup of tea. I'm not a salesy type of guy.
Yeah, so go ahead and sign up now. Go ahead,
Dale
Mike.
is. And apparently Dale is. All right. Let's talk about why. Okay, so the U.S. GDP numbers came in weaker than expected.
Yeah.
Right, they did come in weaker than expected, but the dollar is strengthening. Why is that? That's because the employment cost index is extremely strong. That means and the ECI, or employment cost index, will reflect some possibly upcoming inflation, which might herald a more aggressive FOMC. Possibly, and so the dollar did strengthen, and we saw the euro back away from resistance. Now, keep in mind that the euro, what's interesting about the euro, and if you watch the overnight action, which I didn't see at all because I was obviously sleeping, I got up like right around here as we were hitting resistance. The Europe and the Eurozone CPI data came in stronger than expected, which is interesting because Mario Draghi just yesterday, so let me make sure I emphasize, just yesterday, he was talking about inflation not being too much of a worry, but yet the CPI data in the Eurozone came in much stronger than expected. Excuse me, and I think that caught the market off guard. I mean, we had, flash estimate CPI come in 0.1% and core 0.2% higher than expected year over year, and everybody's probably going, holy crap, I was shorting the euro yesterday.
Right.
Based on,
not if they followed Nick's harmonics and what we talked about yesterday, that it's still a 980 is AB equals CD.
Yeah.
So we could still get there. There's some stops over the high from early in the week that we didn't take out. I think we could take them out. That may be the opportunity next week to short the euro.
And it might be, and look, I was just reading a Goldman Sachs piece this morning. It's talking about like the downside possibilities of the euro. I don't know if I necessarily want to play it through the euro dollar per se, because I'm a little worried about the dollar in general. Because I mean, if you look at the euro dollar, the euro, euro US dollar, we are still outside of this triangle here.
Right.
We have maybe a really jacked up looking inverted head and shoulder pattern that still really points up towards 112, 113, and it could even take us all the way out to 114. I don't know if I really want to play the euro dollar to the short side. What I am playing to the short side right now is the euro pound, because guys, I'm going to tell you something about the pound dollar. Okay, the pound dollar, and I'm long, so I'm talking my book here, because I'm long actually 2 million pound dollar alone.
And you really gutted out that euro pound short Monday. You gave up a bunch, and
I did.
Didn't change your picture. And both you and Steve had the discipline to sit and being rewarded for it.
Yeah, on some of it, and I closed a little bit of it early because I felt like I had too much pound exposure. Because I was short aggressively the euro pound as well, which I reshorted again this morning, not too far away from here, as we were starting this webinar. But regardless, if you look at the pound dollar, it is, notice this like little, this little trend line right here. I mean, we're tagging, the underside of this trend line, and we're actually breaking out. We're above the 127% extension. Yes, I understand that we're overbought here, but we can become overboughter. When I say overboughter, because if you look at relative strength, guys, and here I'm just going to highlight it here. Relative strength has been higher here, 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 and way over here. So there's nothing that says that we can't see close to 80 on relative strength in the cable. And so if we rally to 132. Or 132 up here, I don't see that as being impossible and something that can't happen here. Let's go, like up in this neighborhood. Then relative strength might be, getting to really overbought situations. But, the pound looks very, very strong. And that is taking into account that the GDP numbers, the preliminary GDP numbers in the UK also came in weaker than expected. So when you go, oh, wow, we had weaker GDP numbers in the UK and the pound is still stronger today and it's holding up well and it's not really backing away from highs. If I was short the cable, I'd be pooping my pants right now. I probably would be extremely concerned. All right, so with that being said, the cable looks really strong. The euro, you know, I question a little bit, but still, you know, it's in breakout territory. So, you know, who am I to say it's topped? You know, the easier play might be trading the euro pound to the short side, because if you look at the dollar index, which is the inverse of the euro, I mean, you know, we have us breaking out of this triangle. Now, Steve Volge, who you know, I respect his work obviously as well. He has this you know, this trend line drawn across the bottom here, which you know, realistically we could be, you know, just holding. And I would venture to guess that the dollar, you know, you kind of have to let it break above, you know, try to fill the gap here, which this is the gap from the weekend, you know, after the presidential election, or let it break these lows before you can get too aggressive. Like I'm chipping around. I mean, I've been buying the euro. I bought it twice this morning. I'm long right here at 109.11 that I bought, you know, maybe about 35 minutes ago. And but I've been scalping it. I bought it down at 11, sold it at 22, or I bought it at 12, sold it at 22 right after the data. I bought it here at 11 again. I'm going to try to sell, you know, maybe 20 pips higher. I'm not trying to make $1 million here. I'm just, you know, just kind of scalping the euro to the long side, you know, because I know we're in breakout territory, so I don't mind being long. But I think the dollar really is going to, you know, tell us a little bit more. Should we break above this resistance or break below the support? Now, one other thing I want to point out here is gold is holding up really well.
I noticed that.
I am long gold, and I've been long for the last 2 days. That's silver. Silver looks like crap, by the way, but gold is holding this this 1260 level like a champ. I told you guys earlier this week I was going to be long a little bit here. If we get, you know, start with breaking out, you know, towards the 1270 level, 71 level, I'll add. You know, and I am looking to do so. And then if we break above 1300, then I'm going to get very aggressive. So there are many places that I'm going to buy gold on the way up if I'm right. But remember, like I pointed out 2 days ago, the risk reward is here to be long, and that's why I am long, and I'm still long. I haven't changed my position. I've been in it. It's been a little frustrating the last couple of days, but that's how I'm approaching gold, because if it does eventually break those highs, then we're going to have a pretty massive breakout on our hands. And I'm more worried about risk appetite at this point. Same thing that I was yesterday or 2 days ago. You know, about, you know, just before the tax plan, the tax idea was announced. I don't even want to call it a plan. It's more of an idea than anything.
I think Trump is also going to let you write off. They're eliminating some deductions, but I think that you're still going to be able to deduct Tic Tacs.
I'm down with that. I'm down with Tic Tacs. You know, I'm not. This is kind of a funny story. Every time I go to the grocery store, every time, if I have my kids in tow, like, you know, I take them to the grocery store, I undoubtedly will walk out with Tic Tacs, gum, or some sort of. Dad, can I get these Tic Tacs? Dad, can I get sunflower seeds? Dad, can I? And I swear to God, I've spent probably a good couple $100 on Tic Tacs the last couple of this last 12 months. So I could write that off. That'd probably not be a bad idea. Yeah. But I just wanted to point out, I think, you know, now that the stock market's coming off a little bit, gold might firm. If it does come off here, I think gold has the potential to really strengthen. You got to look at silver. Silver's been underperforming, but if silver can make the turn, and I pointed this chart out yesterday with Forex Analytics, but you can see we, you know, kind of broke out and then came back down, but we just hit a false breakdown.
Yeah, looks like a 3 driver diverging too.
and it's divergent right there, and this is an hourly. I mean, we could really start to rally here in silver too, and if silver and gold rally, that's going to put some downside pressure on the dollar. I am still short the dollar yen, right around these prices that I've been short the dollar yen for the last few days. But you know, it's kind of positioning myself. I don't know if there's a whole lot to do today. Like I said, I picked up the euro a little bit, and I'm going to sell it. The days like today, especially being Friday, it's the end of the month. Days like today are the days that I scalp around. I'm going to keep a core position of the pound dollar. I'm going to keep a core position of the of gold long. I'm going to keep a core position of the dollar yen short as long as I don't get stopped out. You know, because if the thing goes above 112, I got to get out. I mean, there's no ifs, and, or buts. You know?
I teach this, Blake, as far as Fridays are concerned. Say, for example, you had a positive week in an instrument, then almost anything you want to do on Friday, you could do Sunday night or Monday, usually a very high probability at the same or better level without the risk, because what normally happens is if you have a strong week, and let's say, you know, we've had a strong week in the euro, normally you get follow through on Sunday, Monday, into Tuesday. And so once in a while there are inflection points on a Friday, but that's normally accompanied with an NFP. But just a normal Friday, you have to look at what a market did on a weekly basis. And then normally, not all the time, because nothing is all the time in this business, you're going to get follow through in that direction into early next week if you're looking to fade it.
Okay. Yeah, that, you know, that's a really good thought. I mean, yeah, the momentum on Fridays usually does carry over. Excuse me, I just hit my desk with my knee. It does tend to carry through over the weekend too, if we get some decent momentum. So, you know, which, yeah, that's to be seen just yet. Hey, I got a couple of questions that have come in. Vamsy asked, you know, what broker do I use? I use JP Morgan, but it's an institutional platform. You know, I don't even know if they do, like, I don't know if they do.
I
don't think they do, Blake, either.
Yeah, it's they and by the way, JP Morgan provides, I want to say it's like, because I heard the statistics, it's like 80% of the liquidity in the FX market is traded through JP Morgan. It's crazy.
And for those who don't know, Jamie Dimon is Blake's broker. You talk to Jamie before you trade the euro?
Every time. You know.
Yeah.
Actually, Jamie talks to Blake to ask him for quotes.
Okay, Steve.
Yeah, that's it. How you doing, Steve?
Hello, mate. Fine.
Awesome. And I know Steve and Stelios are actually working together today in person, so that's kind of cool.
Wow.
Yeah, that's pretty neat. So, you know, as far as you know, what I want to do market-wise here, I'm not, like I said, I'm not 100% convinced on these things. What I am looking at, though, I'm looking at some of these yen pairs. The stock market you can see coming off here. I mean, look at the euro yen. Let me just give this to you as an example. Here's the euro yen, and if you were around and you watched our week. Well, you watched our week ahead video almost 2 weeks ago.
Yeah.
We're at 115 or 115. I said, hey, you know, we had a Gartley pattern here. Look for reversal. We can go as deep as 114, but look for a reversal if you're a buyer under 115. I think there were a lot of traders that got our alerts from ForexAnalytix that we don't have it now because that was, you know, 2 weeks ago. We rallied, and we rallied substantially, and I did not I expected us to get to like 118. I did not expect us to get all the way up to 122, but that was election related. But now that we're up here and we're at the 122, you got an 88% retracement that we've been rejecting. You've got this downsloping trend line, and on top of that, you got equities that are coming under pressure right now, right?
Yeah. And you also have Greg thinking that there's going to be some downside action into possibly the huge gap that it left.
Right. So So anyway, it's something that I think you guys should possibly pay attention to here. That we could see some downside.
Blake, there is another friend that was asking for Aussie Kiwi when you have the time and the opportunity.
Yeah, I do. I'm going to take a look at this, and I'm going to have to go for a couple of minutes. So here's the Aussie New Zealand. Aussie New Zealand's right up against some trendline resistance, and we're just kind of rejecting here. So you know, just kind of struggling at the moment. You know, I keep a core position of the Aussie New Zealand long. I've actually sold some here recently. After having this nice little
one of our members, Vamsey, called the break within the buy within 20 pips at 106.70 was his number, and I think we traded 50 or 45, but he was right on top of it. I don't know if Vamsey's been with you for a while, but it was a great call by a guy in our community.
Vamsey has been he'd been a listener on the Morning Edge for a long time, and a very talented. He's got a good eye. Definitely, yeah, definitely.
Great call, Vamsey.
All right. Well, hey, I'm going to switch it back over to you for a little bit. Thank you so much. I'm still here. I got to check out for just a couple of minutes. But I'll be back, and I hope you guys. I'll see you guys in a few minutes.
All right, buddy. Thank you, Blake.
Thanks, Dale. Thanks, everyone.
Hey, Steve. Anything you want to update the community with here? With today's action?
To be honest, today has been kind of boring. In most things I'm watching, whatever has moved more than just a little bit, still does not produce some kind of a break or a change of technical picture. Let me see, I may have something to share here. Actually, I already posted for Sigma. Okay, we have something. Okay, give me the screen. I can show a couple of things actually.
Okay, buddy. Have you enjoyed this first month of the live room, Steve?
More,
I mean, I've learned
more than a little.
You.
It has been excellent. It has been excellent. I'm really happy, and the response from the people that participate is also enhancing this belief. Okay, let me show you this. Actually, I'm doing this live, as you see, because I have the feeling.
You're okay.
Yes, I actually had the right feeling. Look at this.
Yeah.
This is EuroCAD. So we had this trend line that we're currently testing, and I just popped an extension of the move from the lows here to, so from the first leg to the second leg, and as you see, we've already tagged the 100% somewhere here. We're just above it. So we're currently testing in EuroCAD this trend line resistance, and we have equality of the first leg with the second leg. So for scalpers, I think that I'm going to be monitoring this because, as you very well said, actually you mentioned something that I pay attention to very closely, and many people perhaps didn't pay so much attention. You mentioned indirectly the factor of seasonality, and when we're talking about seasonality is not only, oh, let's monitor when, for example, crude is usually stronger, which months, because, if you want to take, for example, the long side, those months are probably, a better bet or whatever. Seasonality also means that, statistically speaking, we are seeing way more often than you would expect tops and bottoms at the beginning or the end of a week, at the beginning or the end of a month, at the beginning or the end of a year. The reason this happens is not accidental. I mean, it's not something magical. It simply has to do with constitutional flows. I mean, with institutional investors flows, I mean, because you know how it is. They need to adjust portfolios. They might take a decision what they want to do with the portfolio, and they're going to do it on a Monday, or they might decide to take off positions. They might going to do it on a Friday. Obviously, at the beginning of the year, they've already taken some decisions about what they want to be overweight, what they want to be underweight, etc., etc., etc. Same with months. So for example, I wouldn't be shorting necessarily on a Friday, but I will definitely be monitoring because this might provide a good opportunity, to the short side. Okay.
Counter trend.
Yes, a counter.
Yeah.
Yes, definitely.
So I asked you yesterday, because you are looking to get on board on the long side. I asked you yesterday because of your long-term psychology in markets, if you would play a counter trend pullback move in these instruments that you're longer term bullish on.
For this one, I like the
answered
consequences. I might actually do it. That's not the first thing I'm doing when I'm waking up trying to find, for me, even a 150 pip move counter trend, for my trading style is a scalp. I know that scalpers might go into the market to grab 10 pips, 20 pips, 5 pips, 30 pips. But for my trading style, this is almost a scalp. You understand what I mean?
I hear you.
Sometimes I'm going to take counter trend moves when I'm very convinced. And the reason is because in essence, I would like to make some profits so I can fund my stop loss when I'm trying to join the trend again. You know what I mean?
Sure. Yeah.
Yeah. That's
so the cushion, if you pick up to 150 pips on the short side, you're cushioning your risk on the long side.
Exactly.
I got it. Yeah.
So let's have a look at the pound Aussie. Has been excellent, excellent. But I see 5 wave moves up probably, and look, we're testing now the 23.6%. That was an amazing. We had talked about it with Blake, etc. Blake had produced it also. I mean, look how technically beautiful it was. Descending wedge, then a triangle with almost a flat bottom, and then after you break out, boom. That's it. We've penetrated through the 50 DMA. We've penetrated through the 200 DMA. The secret here, when you want to trade some kind of reversals, for me to be a little bit more educational, is the following. You have a trend. The momentum was clearly very strong. How do you know that? One of the reasons I'm using 2 moving averages, the 50 and the 200 DMA, is because from when you see them diverging or converging to the price action, it's another way for you to monitor momentum. So for example, look at here that we had the acceleration, how far away price action was from the 200 DMA. But then when we started consolidating and forming a bottom, they converged. So you see, 200 DMA provided resistance just once, and boom, we penetrated through it. And now we're testing the first fib level. I'm of the opinion that this thing is going higher, but the risk reward is not to be long anymore. It's more than obvious.
Yeah, but after a pullback, maybe back to 38.2, that was a big breakdown for.
Listen, this is an excellent for somebody that wants to join the who wants to join the trend. Let me show you this. That's why I love horizontal zones and confluences. Just look at this. We can build some technical analysis all together here. Okay, look at this.
Yeah.
Bottom, resistance, resistance, bottom, resistance, 200 DMA. And let's make an assumption here. Let's say that we turn from where we are.
Say it takes a few weeks, the green moving average will come in there too. They'll converge.
Yeah, not only that. For example, if we move a little bit higher, for example, that might end up also being the 50% retracement, or even if it doesn't, even if we turn at this very moment, which statistically it's impossible, then we have 2 more levels to check out. So for example, theoretically speaking, I'm going to see what the top is going to be. I'm going to wait. My trigger is always a strong candlestick reversal. So this is going to be my first indication. I'm going to monitor the Elliott wave structure as well. I pay attention to the fact that we're currently testing 23.6 fib. I might also do this to see from this peak if this is another kind of a fib. No, it actually isn't. So okay, only if we go higher we might test the 38.2. So then I know where I want to test, the waters. You see, something like that, for example. my line in the sand would be more or less this little zone here, which is also, if you see the 61.8, if we turn from here. So for example, I would be looking for two zones of support, and it's the two zones I've indicated here. Okay.
Someone's saying that the palladium short potential top you talked about earlier in the week is starting to manifest.
Oh, that's
The
excellent.
palladium.
We're going to have a look at it, but let me first show the setup I
Okay.
was looking at with that we
Yeah,
published
Steve.
actually. It's Aussie.
Steve,
Yes, mate.
Steve, you might want to have a look at Sterling Kiwi as well. Remember, we were talking about this yesterday.
Oh, yes, for sure.
It's basically the same structure as Sterling Aussie. And
Okay,
it's
let's
something
go.
we've all been looking at. And it's
Let's
one that
go.
I got out yesterday, by the way.
Wow.
Let's go for it.
I got out of it yesterday, yeah. Have a look
Well,
at that.
nice parabolic move, Stelios.
Parabolic, yes. It's currently exactly that. It's currently a parabolic move. But let's see where we stand.
Yeah, if you scroll to the there, you got it there. It's a resistance zone that is entering right now. So there has to be some kind of a reaction here. I
Let's
think.
also
Same as the Aussie.
Let's also see this zone. Oh, we have a 38.2 and the 23.6. Unfortunately, they didn't work currently. Let's see horizontal zones. I would say somewhere 190 is a zone. Yeah, this is definitely a parabolic move. I mean, but we have no trigger to be short currently. We have, I mean, there is no reason to look at being short at the moment. Do we have an overbought RSI? We do. But do we have some other kind of level I like here? No, we don't. And most importantly, I don't see a candlestick that will tell me, okay, this is now exhausted. Do I believe that we're closer to a pullback? Yes, I do. I mean, I know a lot of people that would say, okay, I think this is parabolic. I'm going to start taking some short positions up here, you know, and start piling them in higher and higher and higher and build a position, and I'm sure it's going to turn around. But, you know,
Yeah.
if I don't have a trigger...
No, Sir Pinkert says Tuesday's a high.
Can definitely
Yeah,
be.
ever heard of Sir Pinkert before?
Can definitely be. Why not? But you know how it is. I don't like to predict.
Yeah.
I want to have a plan in advance, but unless I see some indication, you know, that the plan is actually about to work, I'm not going to do something about it. Okay. This is the setup I showed today, actually. Sigma Squawk published. It has to do with those again. You remember we had seen those channels together some time ago,
Yeah.
Dale.
Yeah.
We seem to have broken falsely below the 200 EMA. We gapped above the channel, and we're currently testing this area. Now, in my opinion, even if this is a corrective move, I expect it to have another leg higher. So
Up to the green, like ABC, up to the green moving average for a short?
Exactly. Something like that would look good. Something
Yeah,
like
all
that
right.
would look good. But on a break below the 200 DMA, which is going to come very soon at the levels of the gap, I think
Yeah.
that then we probably have a resumption as it is, because this thing can travel easily more to the downside, okay? Because even if this is a corrective move, which I believe that there is a chance it is, I see this as impulsive, we should still have like A, B, C, so we should see lower prices most probably.
You know, Chris Laurie believes this is the cleanest risk-on, risk-off move across, even more so than Euro-Yen. Although Euro-Yen is, you know, reflecting risk-on. Look at the, you know, Aussie-Yen, S&Ps are retesting the highs, and this recovery in Aussie-Yen has been feeble.
I have absolutely no objection to that. I mean, is it a better indication of risk than Euro-Yen? In my opinion, yes, it is. I mean, I agree with him 100%.
Okay. All right.
Under most circumstances, it is. Let's look at our friend that said about Palladium. Oh, there we go.
It's making new highs.
Yes.
A buddy of mine, Jess, who's here in the room, he does supply demand work. He says it's in his supply zone now.
Let's see. It's also a matter of, yes.
840 to 880 is his supply zone.
Yes, it definitely is. We still seem to be in an ascending wedge. That's why I told you the other time. You see, we were testing it here. I still had no signal.
We could have a throwover. We could have a throwover.
Sure, we can have a throwover. That's not going to be the first time. It's actually a very, very usual trap. Very usual trap. We also have the channel as the potential, but you know, I'm monitoring. The moment I see a daily candle that shows that, you know, things have changed, that momentum has changed, because I cannot ignore this RSI. Look at it. Look at it. We've made 1, 2, 3, 4 now higher highs in a row, and we're talking about higher highs that we've been making since August 2016. And RSI is constantly below the previous high, constantly.
Still is. Still is.
Exactly. Yeah. And I cannot ignore this. I cannot ignore this. I like this divergence, you know, very much. I like this divergence very much. I mean, I'm looking, and I'm going to let our friends know in the webinar when I see something that tells me, okay, this is it. I'm going to let you know. But I still like it. That's why I keep monitoring it. You need to be patient many times, and that's why this is one of the reasons I'm monitoring 45 markets. Because if you monitor, I've seen a lot of people ask, like, what is your opinion on that and on that? And I'm like, okay, you know, I can give you or whatever, but are you actually monitoring 2 pairs? And they're like, yeah, I'm very good in trading euro, for example, and pound. There are people that actually do that on a daily basis, and they do good. But if you're not a scalper that you can, even from a single pair, you can scalp all day long, and you're looking for opportunities to get into a trade and stay in that trade potentially for days or weeks. Then
you have to broaden your horizon.
Exactly. You need to broaden your horizon. Otherwise, most of the year, you're just going to be looking at the screen and doing almost nothing. I mean,
although Steve, I know guys from the CME that never left the same trading pit that were multi-zillionaires, because you can get to know one pair like the back of your hand, and a lot of people don't have the same amount of time to dedicate to screening like you do.
No, you're right.
So there are 2 schools of thought. I mean, you know, I knew a guy in cattle never left the cattle pit to go trade yen futures or any of the, you know, other
but most probably that person fell under the category of scalpers that I said. I mean, if you trade cattle all day long, it means that, you know, you might be buying it to make a fraction of a movement, you might be selling it to do the same, etc., etc., etc. You know what I mean. So,
hey, Steve.
Yes, mate.
Hey, whoops, hold on. I just said out, Steve, and I was in the chat room. I was trying to say out euro dollar. What I was going to say is, and I don't know if you mentioned this because I just jumped in the conversation. By monitoring several different instruments, you don't have to trade them all. It's more. I look at it more from a correlation standpoint. I mean, I can't tell you, you know, how many years it's been since I've traded crude oil, and I don't trade it. And like Nick is a successful crude oil trader. I can't trade it. I can't trade myself out of a wet paper sack in crude oil. So, you know, but I look at it because I'm more interested in the correlations that it brings to whatever else I'm trading.
Exactly. Oil, for example, has proved plenty of times that can lead risk. It's leading risk appetite, for example, and other commodities. So obviously, yes, this is an excellent point, actually. No, I didn't mention it, but because, you know, sometimes you speak and you consider something to be, you know, self-explanatory, but you're absolutely right, because, you know, many people that might be listening are first traders, etc., and that's one of the reasons. Yes, for example, palladium, I've been monitoring it for years, and I'm now looking to take just my 3rd trade in it when I go short this thing. It's just going to be my 3rd trade in it. In what is it, like 5 years I've been monitoring, something like that. But, you know, 3 trades from something exotic, then 3 from another exotic or whatever. You know, they accumulate, added to what you trade more commonly. And, you know, if you're patient, opportunities come to you. but you know, a big mistake that people do very often, and Blake is going to be the first person that's going to tell you, because you know he's been having and mentoring traders in his webinars for, I don't know, 15 years or so, is they tend to overtrade. They say to themselves one day, what am I going to do? I'm going to be a trader. Perfect. Let's put a few screens in front of us and start finding things to be long or short.
Well, you know, okay, so the common misnomer with traders, in my view, is, and you might have heard this, but a lot of people forget, is that you'll hear people say you get paid to wait for a trade. But what that really means is, you know, and it's tough for some people, because if you are like me, and I spend, and I'm not exaggerating, 14 to 16 hours a day in front of my computer or in front of a device where I can be trading, it's probably a realistic, actually I would say it's more like 18 hours a day, because I never have, especially with mobile technology, there's never a way I can't trade, and I'm constantly looking at quotes no matter what I'm doing, even when I'm driving, which is not necessarily the smartest thing in the world to do. But you know, I sometimes feel, okay, I've spent 18 hours in front of my computer, or 12 hours or 14 hours. I need to get paid because I've been working. You know, I've been working. I've been searching for trades. I've got to make some money today. This is you know, it's all, you know, I should be getting paid here. Why not? And so you end up forcing trades, and that is very common amongst traders. And I'll be the first one to admit I've always got something on. I've always got some sort of feeler out in the market, but I think but I do it tactfully, and I do it strategically, you know, to position myself into the market. There's very rarely do I ever have a time that I don't have a position on, but I'm also seasoned. I've been doing this for many years, where, you know, most
just having a small piece makes you pay attention, doesn't it, Blake?
It does, yeah. That's why I always keep something on, because it keeps me focused. If I don't, I will lose focus. And the markets are not like riding a bike. It's not, to me anyway. Maybe it is for some people, but for me, it's not. If I don't have something on, and I like, if I'm on vacation, it takes me a while to relearn. Not necessarily relearn the market, but kind of get myself oriented again. So,
Blake, I think I've never asked you this question, although with Blake we speak every day and we're friends, but I really haven't asked you this question. From my personal experience, and you know, that adds to the conversation actually, when I was trading for the fund until we started ForexAnalytix, my percentage of winning trades was like amazingly better than trading on my own account, because the money were more, and I wanted to be more careful. So what I did, I was filtering out even stricter the trading ideas I had. For example, I remember I've told you that before. Mr. Alexis was telling me, you have, you know, such a great percentage of hits. Why don't you take more trades? And I was telling him, I take more trades for my personal account, and I have a worse percentage. So why should I take more? Does the same apply to you?
No, not necessarily.
Trade, I mean, less.
Nope.
No, you don't.
Nope. No, but when I go large. So when I get aggressive, I'll be aggressive, and that means that when I'm right, or when I'm really confident, I press pretty aggressively, and that usually makes up for a lot. Like I can be down on the month and see that one opportunity and take advantage of it, and it catapults me throughout the quarter. Or I could be, you know, slightly higher on the month and do the same thing. But I tend to trade just as aggressively. But I know I think the way you do it is probably similar to a lot of people as well. I don't think that that's uncommon at all.
Yeah, I think you're right, Blake, because I think a lot of people care or have more concern for other people's money than their own. You know, because they're used to it, and they don't have to. You don't have to explain to yourself why you took a hit, but try and explain it to somebody else.
Yeah, that's a great point. Psychologically, that works.
Yeah.
That applies to me for sure. I mean, I always prefer to lose something on my personal account than, you know, on the funds account, honestly. I know it sounds stupid. I mean, somebody could say that, okay, worst case scenario, what's the worst case scenario? You know, if you don't do well, they'll tell you, okay, fine, you know, you don't do well, bye-bye. So, you know, you have no downside if you don't perform, but just that you can keep doing what you were doing. But, you know, psychologically speaking, I always felt better, you know, losing my own money than other people.
Yeah, and I would think that if it was definitely like a family member or friend, which, you know, that would definitely come into play a lot, I would imagine. But some people, I've seen it the exact opposite, especially on Wall Street. I see a lot of, it's not my money, so I'm going to be very aggressive and reckless with it. And if I hit it big, I hit it big. And if I lose money, well, no harm, no foul. So what? I lose a job. Who cares? I just go find another one. You know, I've seen that attitude too. I've seen it work the other way around.
It's an issue of ethics and morality, most probably, among other things. I don't know. I mean, that's my assumption.
And you know, in the Marine Corps, oh, this is going to offend a lot of ladies. So if you're a woman, just go ahead and plug your ears. You know, when you're young, dumb, and full of cum, you know, that might. Did I just say that out loud? Oh my God, I can't believe I just let that one go. Oh boy.
That's all right.
It's okay. It's Friday. It's
okay,
Friday.
Friday. I think I remember.
If I may add one more thing.
Oh, hey, Stel, yes.
Hey, guys. I know you were talking about overtrading and stuff. It's not, you know, it's something that I've seen a lot, and it's not only for people who are new to trading. I used to be a market maker, interest rates market maker in the city of London, and I used to trade sterling rates in a US bank. So I was doing interest rates, and I always had a cable positions due to being in a sterling trader in a US bank. And that's all I traded. And then when I left and I came home and I started trading for myself, I started over trading massively. And I've said this before, like for a year and a half, I wasn't making any money. I was losing money. So, you know, you have to reconsider when there's a big change in what you're trading or the way you trade. You have to reconsider everything. And it took me over a year to really get my focus. And then when I started trading my father's money, then I started doing what Steve said, which is be very selective. I was like 10 times more selective than I was with my own funds. So I have to confirm what Steve is saying. And it's, you know, it's for me, overtrading is the #1 danger for a trader. You know, for others, it's other things. But for me, overtrading is like, it can be very, very dangerous.
Yeah, and I think that's the, you know, it's everybody's got their Achilles heel in trading, and
exactly.
and that's, since this is Friday, guys, and the market's honestly not doing anything, because if it was, we would be saying something. Although the bonds are recovering quite nicely after these numbers, but the one thing I'd like to point out is I think it's important that every trader, no matter what you're doing, no matter what your size, how you're trading the markets, to each his own, understanding what your strengths and weaknesses are is extremely important. I know what my strengths and weaknesses are as a trader. I know I'm very, very, very well aware what they are, and you should be too, and play off of them and understand them, trade around them, you know.
Blake, Stelios and I, that's in intercompany, but I'll say it, have to go in a meeting. But before we do, a friend asked about USD TRY, which is actually the Turkish lira.
Right.
I've been monitoring this for some time, so I mean, he's lucky about it. So this is a long-term daily chart. I just wanted to show, because he asked, he said that it broke down on a monthly basis, but I'd rather show the daily. As you see, this has been an extremely clean uptrend, and the reason you see me draw those lines is because, you know, with a quick view, they help you monitor the momentum of the uptrend. As you see, obviously at this phase, it was a maniac momentum, right? I mean, the line is almost vertical. Now, after seeing this huge uptrend, and Stelios and I, due to being neighbors, we can also give you some macro background to the TRY. For example, we can tell you that Erdogan now won one way or another. This is a big discussion, the referendum in Turkey, and this might help things calm down for some time. Turkey is not on the clear on a political basis for any reason, but things might calm down temporarily. So if the dollar helps, yes, I see that we do have a break here, and we can easily, I mean, I see here, for example, a confluence of the 61.8 from this last stage of the move higher.
Nice look, Steve.
For example, we can easily, let me change this.
Yeah, you got a parallel channel there too.
Yes, you have the extension of the parallel channel as well.
Yeah.
So, yes, I think that this is a very viable target down here, around 320 something. So that's for the friend that asked about the USD TRY. Okay, guys, Stelios and I have to go for a meeting, so it was very nice and pleasant spending the week with you. We'll leave you at the very capable hands of Blake and Dale, and we'll see you on Monday.
Have a great weekend, everybody.
All right,
you guys have a great one.
You too, my Greek trading warrior brothers, and I just, of course, we have a webinar Monday. Jack, is there a holiday I'm not aware of?
It is. It's European Labor Day, I think.
Oh, okay.
Correct.
Yeah.
All right. Well,
1st of May, European Labor Day. Yes.
Oh, like May Day. The communists do that, right?
Yes.
In Russia? In Russia, well, May Day's their big day, you know, the worker,
No,
work well,
to be honest,
we send you to Siberia.
To be honest, it's a pan-European holiday.
All right. Okay, so I'm going to take the screen back from Steve. You guys have, Steve and Stelios, have a great weekend. I just want to show a look that Jess provided that goes along with what Steve was talking about in Palladium. And
yeah, I was going to say, Dale, yeah, why don't you, there's a bunch of guys that wanted to see charts. I'm going to mute myself, and why don't you show some of those charts that people are looking at?
Okay, I will. All right. Okay, so Jess is very good. I've known him for years now, and he does a lot of supply demand work, and he does it with weeklies and monthlies, and this is the ETF on Palladium. So if you don't like the leverage of the futures, you have an ETF. So thank you for that, Jess. And I know there were other looks. Ronit had some stuff. Let me just scroll back on the question box. There's Jess's Palladium. Palladium. Here's the Euro Yen from Ronit. Ronit did a nice interview last week. There's a look from him in Euro Yen. He's calling 2190 the breakout, which is something that Blake also showed. That major trend line right there, the resistance being right there. So here's Euro Yen. He's showing this resistance right here, 2190. A lot of triangles here. This is a triangle. This makes it a triangle. So pivotal. We get over this red line, Ronit, we're on our way, right? Okay, and then back under 115, look out. So there's another nice view from Ronit. Let's see what else we have here. A lot of people have left. Okay, and Vamsi made that nice call on Aussie Kiwi last week. So you've been around with Blake for a while, Vamsi. Great call. I hope you're taking something off the table up here. Steve showed it at resistance, you know. Like Blake says, it's always good to get paid. You know, it's not a profit till you take it. It's just paper. Let's see what you have here. I think it was gold. Okay, potential yearly candles, 1375. So this is a monthly look by Vamsey. Okay, so you're in the same camp with Blake, thinking 1330, 1375. That's a nice look. Everyone thank Vamsey for that. And I feel the energy starting to leave the room. And, you know, I just wanted to show one thing to everybody. Let me ask a question. Is trading the most difficult endeavor you've ever tried in your life? Most difficult thing you've ever tried in your life or gone through? And, you know, I'm sure Blake had his years, and I know a lot of people that have followed me for a while may have seen this video, but I think it's also important to stay, there you go. You can't learn experience Eastwood Westwood. It only comes with the passing of time and living through things. And in our business, that passing of time is screen time. That's a great testimonial, Gary. That validates what we're doing. And learning from others. Yeah. A path of self-discovery. You will learn about yourself doing this. But, you know, I want to say that really, when I was talking with Blake earlier about people trying to sell, it doesn't have to be, and it won't be. It won't be. Because there are more difficult things in life to overcome. I'm sure everyone in here has. And I like to inspire people. And I just want to show you this video. Those of you that have been with me for a while, you've seen it. Okay, Dimitri, how are you? But this is about never giving up. And we all think that our problems are the biggest until we see what other things people have to overcome. So I just want to show you guys this before we go.